Fitch has downgraded the outlook on China's debt, warning of increased risks to the world's second largest economy. The ratings agency has cited economic uncertainties and efforts to shift growth away from property-driven models as the main reasons for the downgrade. Despite these challenges, China's actual issuer default rating remains at A+, supported by its large and diversified economy, solid growth prospects relative to its peers, robust external finances and the reserve currency status of the Chinese yuan. Well, let's bring in Professor Srikanth Kondapalli, who's the Dean of the School of International Studies at Jawaharlal Nehru University. He joins us now from New Delhi. Good to have you with us, Professor. How might Fitch Ratings' revision of China's long-term foreign debt outlook impact global investor confidence, do you think?
I think when you look at the FDI flows into China, which has been reduced from the previous figures of 3 digits to 2 digits, and also in terms of the growth rates falling relatively for the past actually 5 or 6 years. In 2010, they had 10% growth rate, but currently it's between 3% to 5%. So generally, there has been a growth rate decline. And the reasons were mainly traced to the COVID-19 pandemic, when the lockdowns were instituted by China, which also meant the manufacturing sector suffered substantially with the factory output down, the PMI, the manufacturing index falling down, also the consumer price index getting affected. In the light of all of these, there has been a general trend of decline in China's economy. And so the credit rating agencies like Moody's last year and Fitch this year, they have downgraded the Chinese credit rating capacity and status this year to almost negative. That is, they suggest that the government expenditure has increased, the debt to GDP ratio is high, and this is affecting the credit capability of China. And then the investor confidence is also shaken because of these growth rate decline and restrictions in terms of COVID-19 pandemic aftermath.
Okay, Professor Srikanth Kondapalli, thanks as always for joining us on Money Talks.
Thank you.